Hello and welcome everyone to today's Gold and Silver Club, presenting the weekly commodities review in alliance with ACM Gold, presented by myself, Phil Carr, and Nick Kelsey. We have a very exciting session for you today. It's a post non-farm payroll session. We've had some tremendous moves on the markets. We will be going through those with you step by step. Today we'll be reviewing the latest developments in the commodities markets. We'll analyze the week's performance. The live session will cover an end-of-week summary for the metals, for the energies and agriculture. We'll be providing news on gold, silver, oil, natural gas, coffee. We'll look at the top trade of the week. We'll look at live market commentary and technical analysis. We'll also look at the week ahead, so key events looking forward, and of course answering any questions you may have on today's webinar. So gold pricing this week has had another interesting week. We've had the FOMC statement on Wednesday and non-farm payroll today. So let's take a look. Gold prices fell today as non-farm payroll exceeded expectations. Gold price continued to fall on Friday after better than expected non-farm payroll data in the US Federal Reserve decision on Wednesday to taper its monthly asset purchasing program by a further 10 billion per month, which has put a lot of pressure on gold this week, and certainly the US dollar surged today. On Friday, gold prices fell 1.02% to $1,282 an ounce. On the open of the US trading session, they've since fallen lower than that, while silver prices followed suit, declined 0.45% to settle at 19.12 an ounce. Today's April non-farm payroll figures finally confirmed the US economy had broken free of its winter grip as the economy added more new jobs than estimated. So according to the Bureau of Labor Statistics reports, a total of 288,000 new job positions were filled during April, and hinting at a recovery from the first few months of 2014 when the harsh weather halted the progress of the private sector in the United States. Also, the unemployment rate eased to 6.3% from the previous month, beating expectations of 6.6%. So gold does remain under pressure as recently tensions in Russia, Ukraine also begin to ease. In recent weeks, the intensifying tension in the region boosted gold's safe haven allure. Having said that, it is very unclear whether this tension between Russia and Ukraine will be fully resolved, and for that reason, gold could still benefit from this. So if this situation worsens, gold will be back above 1300 level very fast. We saw last week that we had a 300-point move over the US session on news coming out of the Ukraine and Russia. So we need to watch out for that for any gold trades which you may be in. So we'll take a look at the technicals very shortly. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil, natural gas, commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also, a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making that transition into proprietary trading, and prior to co-founding the Gold and Silver Club spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that's some background on the Gold and Silver Club. We'll take a look at the gold price. We'll come on to that, in fact, very shortly. I'm going to come on to my live technical charts. Before we do so, the top trade of the week this week, we've had a number of top trades. In fact, gold today, the US dollar index, we have some really nice moves on wheat, on oil. One of the best trades this week was one of the quickest trades as well, has been an oil sell-off we got yesterday, broke through a major Fibonacci level, and we just very simply had a nice 40 points stop loss on that, 40-point risk, $400 risk for each lot. We traded for a 120-point gain, 1,200 US dollars profit on each lot for a 3-to-1 on Brent crude oil. Very simple, straightforward trade just yesterday. So with that, I'll tell you what we'll do. We'll move over to the technical charts on ACM Gold, and we'll have a look at what is starting to play out this afternoon and into next week. So first off, we'll just give you a bird's eye view of the markets here. So essentially, the US dollar index on the news which came out from non-farm payroll absolutely surged to the upside. It broke out and it's actually come up and just found resistance at a key Fibonacci level. And what we saw on the news was that gold immediately sold off. Let me just bring gold into the framework here. We'll have a look. We've actually got a nice downward trending channel here on gold. We can actually draw that in two levels here. When the market actually came down right down to the low of that trend line, you'll see that very clearly. The market sold off. We had, in fact, if you were quick, you would have caught the setup here as well, which we discussed with our live trading room this morning. Came down, hit the trend line below, took our profits. Very quick. You had to be quick in and out, as you always do on news announcements. And now we're slowly but surely seeing gold come back down again, starting to sell off again after a lot of traders obviously took profit at those levels. If we go to the 4 hour, we have done some damage. What I'd like to see now, to see further downward pressure on gold, is a continued break below 12.76. So we need to close below 12.76 to build up some momentum here into next week. Or if we don't do that today, if gold's going to just be a bit more muted this afternoon after the big move, the 12.76 level is going to be the key level we'll look at into next week as well. Okay, let's bring it back to the bird's eye view and we'll move on to the next one. Okay, the next market which I'd like you to take a look at the moment is actually going to be copper. Copper's had a tremendous move over this week. We've had a really nice move. Actually, let me see if I can just draw this on for you, very straightforward. We've had a nice precision setup actually, and we've had a nice move this week. You can see we're surging at the moment on copper. It's just got past our 1-to-1 actually at the moment, and we're getting a nice move high. Just check out this on the copper market. Actually, if you go into a historical chart, all you need, there you go, getting a really nice surge now at the moment. So copper, glad we caught this just as we're getting a surge. So you can see it, there we go, look at copper go, look at that. 2-to-1, come on. Is it going to hit it? There you go, Fibonacci. This is, sorry, the reason I say this is because it's a trade that we're already in. You can see where our entry level is on this market. It's just gone shy of a 2-to-1. It's come up, it's hit the 3.0856 Fibonacci level. A lot of our gold and silver club traders will be very happy with that right now. So we've just come up and we've surged up. Basically, you can see this play out. So copper, that's been a really nice move. So I hope some of you perhaps caught that move as well. We'll move over to also wheat is one we want to take a look at. Where's wheat? Here we go. Wheat, what we've got going on here, let's see if we can draw it. Yeah, we'll draw it for you. It's going to be a bit more difficult to draw here. There is essentially, you've got a V-shaped pattern essentially, but you've also got a W-shaped pattern here as well. We've got a very clear neckline on wheat that we're looking to break out of, which is 0.723. If we get a breakout above that level, that will confirm. You've got also quite a nice monthly candle on here as well. Let's just remove this. Got a nice monthly candle, which is seems to be anticipating, there you go, weekly as well, a nice breakout to the upside over the course of May. So just keep an eye on that W-shaped reversal. We've got a V-shaped reversal pattern here as well. And what that means is basically we're going to put a lot of pressure on the resistance, which is known as the neckline. So it's like so, and we'll just draw a triangle. Here's our, more or less our triangle here. Let me just change that settings for you. Okay, so that is our triangle pattern, and there's a neck, it's known as the neckline there. If we get a breakout above 715, we should get a nice move high here, nice surge up to 2014 highs. Okay, so let's check out, and we'll take a look at, we'll go back to the bird's eye view again, and we'll see what other setups we have lining up at the moment. Yes, Brent crude oil and WTI as well. So what you want to know on WTI, we do have quite a clear channel here on the WTI market at the moment. Here's our other trend line here. It's our resistance trend line, a supportive trend line. We've actually had a bit of a, we've had a nice move on this. If you go over to the daily, we had a surge up today, found some resistance, got a nice inverse hammer. You've got some key moving averages just above, providing some resistance. On the 4 hour, we do have a nice trend line here, where the market is just staying in those trend lines since we've had the sell-off. So since we really capped off the market about the 15th of May, since we got up to the 104 level, we've been in a downtrend on the WTI market, and you can see at the moment that we're just consolidating a little bit around the lows there, the Fibonacci level 99. We had quite a nice move on the NFP earlier on. Brent also came up, surged on the non-farm payroll, hit some key moving averages, came shy of the 108.6 Fibonacci level, hit that level, found resistance, and it's selling off. So it's just reversing at the moment, back at 108.21. And we'll see whether that comes all the way down and it hits that fib level below. So we've got 107.81 below that, 107.17 and 106.92. We've also got fairly clear downward trending channel here on the Brent crude oil market. So you just very simply, you can draw in that trend channel there. You can see we came up, hit the resistance of that channel earlier on. There's an opportunity to get an early entry price on that as well, and we should just continue to sell off within that trend line for the time being as we go into the Friday close. Natural gas at the moment, well, natural gas pretty straightforward here as well. Just add a trend line in. You can see where the market is just consolidating at the moment. We're staying within that upward trending channel. We've also, if you go out to a historical chart, you'll see also a V-shaped reversal pattern looking to break above the 2014 highs here at 4.860 in order to really build some momentum behind this trade. You'll also spot as well that on the markets we have currently got a nice little level of support there around the Fibonacci, so 4.723 providing some solid support for us on the natural gas market right now just as we go into the Friday close. So we'll see if that gets supported, and we'll see if we get a breakout above that major Fibonacci there just at 4.842 as we go into next week. So keep an eye on natural gas. We had the storage inventories come through yesterday, which did provide the natural gas storage inventories yesterday provided a sell short opportunity for natural gas right at resistance, and we'll see if we're going to hold on to the 4.723 level as we go into next week. So let's just do a summary on that, where we are at the moment. So again, post non-farm payroll, we had a fantastic move on the US dollar index. Hope you caught some profits on that as well. We had gold sold off. Now currently gold is just consolidating. It seems to be getting a little bit of support at the moment. Copper, which we had a move on, has just come up and actually hit just shy of our 2-to-1 on that trade. Natural gas is still staying supported by this trend channel. We've got Brent crude oil, which is in a downward trend, WTI in a downward trend. Wheat looks very interesting for a potential move into next week, a breakout to the upside, and coffee at the moment is being supported, one of the best movers commodities of 2014. So that's what we're looking at in terms of the technicals. If we move back over to the fundamentals, what you want to take note of at the moment, let me just put you on to the major 6 news announcements we need to take. Actually, the major 5 announcements now we've had non-farm payroll that we need to take into consideration as we go into next week. Okay, next Monday, the 5th of May, we've got at 4 p.m. Central Africa time, 10 a.m. Eastern time, we've got the US ISM Manufacturing, so the Institute of Supply Management, the ISM Non-Manufacturing Purchasing Managers Index, the PMI, reports on the overall economic conditions of the non-manufacturing sector, including business activity, new orders, employment, and supply deliveries. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken really as bearish for the US dollar, which will inversely affect gold and silver. So that's at 4 p.m. CAT, Central Africa time, 10 a.m. Eastern time. Next Wednesday, we have the US crude oil inventories. That's at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time. That data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So often that provides a very lucrative trading opportunity. A higher than expected reading should be taken as bearish for crude oil, and a lower than expected reading should be taken as bullish. That's usually the correlation that we see. And of course, next week we also, Thursday the 8th of May, we have the Chinese trade balance at 4 a.m. Central Africa time, 10:30 p.m. Eastern time. That data measures the difference in value between imported and exported goods over the reported period. So a positive number does indicate that more goods and services were expected than imported. China is a big buyer of gold, silver, copper, oil. A stronger than expected number should be taken as positive for the metals and energies, and a lower than expected number as negative. That's usually correlation we get. Next Thursday, the 8th of May, we've got US natural gas storage, 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time. So the Energy Information Administration, again, they also report on natural gas storage as well as oil. They provide that report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst that is a US indicator, it does tend to have a greater impact on the CAD due to Canada's sizable energy sector. It's important because the CAD is of course correlated to oil price too. And next Friday, 9th of May, 3:30 a.m. Central Africa time, 9:30 p.m. Eastern time, we have the Chinese CPI. That measures the change in the price of goods and services from the perspective of the consumer. It is a key way to measure purchasing trends and inflation, and China is a big buyer of gold, silver, copper, oil. A stronger than expected number should be taken as positive for the metals and energies, and a lower than expected number should be taken as negative. That will also have a big impact on the commodities markets into next week. So those are really the 6 major announcements to take note of. Non-farm payrolls occurred already. US ISM manufacturing, US crude oil inventories, Chinese trade balance, US natural gas storage, and Chinese CPI. Of course, for those of you who'd like to take really your trading to the next level and find out more about our upcoming workshops in May and June, our Gold and Silver Club Commodities Masterclass, and also find out about how to join our live trading room, you can certainly do so. Get in touch with us at our Johannesburg office. Just call us at +27 11083 8403. You can of course email us at office@thegoldandsilverclub.com and request more information about our live training room program and also upcoming workshops at www.jointhegoldandsilverclub.com. And do make sure you take advantage as well of our newsletters, a free weekly newsletter, gold, silver, oil, natural gas, commodity currency news, live market analysis and prices. We'll cover on that weekly for you the major agricultural news, major energies news for the week ahead, and also precious metals. So it will give you a summary report and our views for the week ahead of all those commodities. Make sure you take advantage of that. And I'll leave these details on the screen if you need to get in touch. And with that, we wish you good luck for today's trading. Have a great weekend, guys, and we'll catch you back here same time next week. Okay. So with that, we'll wrap it up there, guys. So take care and goodbye. Cheers.